And what I want to do now is I want to direct your attention to the last time we had a Wyckoff accumulation. All right, let me get rid of that. Last time we had a Wyckoff accumulation and everybody was talking about Wyckoff in Bitcoin. And that was in the summer of 2021, where we had our, I think it was 90-day accumulation, right? It was May to July. Yeah. It was about a 90-day accumulation where if you took the Wyckoff accumulation schematic and you superimposed it on this price action, you would see very little difference, okay? Even with the cookie cut Wyckoff accumulation schematic, okay? So what I want to do now is, given our last point of support, our spring of July of 2021, that preceded our big rally to the upside, I want to take this, right? Same asset, same support and resistance. I want to take this and see if there could be any similarities in our current price action. Okay, so let's snip this price action right here from July of 2021, and let's put it in and just say that we were in our spring phase, okay? And look at what you get. Look what happens here. It's almost uncanny how your previous price action of July of 2021 matches so very well with our current price action of April of 2022. Okay. Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is April 25th, 2022. And Bitcoin is looking like it has put confirmation of reversal in. We have confirmation of reversal. How do I know? Watch until the very end to find out. I'm going to show you why, according to the Wyckoff theory, the Wyckoff method of technical analysis, and our classical technical analysis that we have done on this channel. We have confirmation of reversal. All right, first and foremost, let's start with the Wyckoff analysis, okay? As you'll know, I specialize in Elliott wave theory, but I have studied some Richard D. Wyckoff, right? I've studied Wyckoff technical analysis in my career of technical analysis, okay? There are 5 titans of technical analysis, right? There's Gann, there's Elliott, there's Merrill, there's Dow, and there's Wyckoff, all right? So Wyckoff definitely should be one of the schools of technical analysis you study to a certain extent. If you're serious about technical analysis, you should try it, okay? Now, according to Richard D. Wyckoff, the market should be viewed primarily in terms of a supply and demand. This is why volume is so crucial to Wyckoff's technical analysis. It's not just the schematics that you see floating around on the internet or on Twitter. It is the idea, the relationship between price action and volume, right? It's all about supply and demand. And ideally, you only get a markup or a strong move up a bull run when supply is exhausted and demand overtakes supply. So that's the idea, all right? Just fundamentally and basically, right? So you'll see I'm on the 12-hour time frame, and I have an arrow down here demarcating a declination in volume, a decrease in volume, okay? And one of the first things you do in the Wyckoff method is you have to identify in a larger time frame if you're in where the market's going to go. Is it going to go up, go down, or accumulate, okay? So on large time frames, what generally are you in? What state of the market are you in, okay? So we've ascertained that given our big downtrend, right, our 73-day downtrend, we are in some sort of accumulation, okay? Some sort of accumulation. Some people say that this is reaccumulation, okay? Reaccumulation for then a another distribution, okay, as Wyckoff would call it, a downtrend. But I contend that this is an accumulation for a markup, okay? And so basically, few will disagree that prior to this stage of the market that we were currently in, we were in a large downtrend. So this could be either accumulation or reaccumulation. Okay, that's the first step. The second step is you want to identify your phase A. So phase A in Wyckoff's method is the turn of trend, okay? And in Elliott wave theory, we call this the initial break of structure, or the A wave. And it's essentially when the big players exhaust the previous trend. They exhaust the selling, okay? If it's an accumulation, you'll see this in a spike of volume, okay? And so this is very crucial, right? You will have to have a selling climax, okay? And I may put my selling climax, you could say that this is the selling climax right here, okay? Because this is where you get the big candle, and this is where you kind of get your automatic rally, okay? But I started it here. To be honest, I prefer the selling climax to be here, because this is a particular Wyckoff accumulation range. Typically, you have Wyckoff accumulation ranges that are horizontal. But in this case, our trading range is slanted. And this is a particularly bullish Wyckoff accumulation, where the supply is so depleted that even during accumulation, it causes price to increase slightly, okay? So this entire Wyckoff accumulation phase is one of the most bullish, if not the most bullish, schematic that you can possibly see, okay? Now, the schematics that you'll see on the internet are just rough approximations. They're not to be followed to the T. So they'll give you a rough idea. But if you take our whole trading range and you compare it to a Wyckoff accumulation schematic, you'll see a lot of similarities, okay? So for me, this is the selling climax of this trading range, okay? I'm looking at this trading range. But for the entire kind of trend, I would say this is the selling climax, as evidenced by this volume candle. Now, in this trading range, this is the highest volume candle, so this is my selling climax. And right after this, you get an automatic rally. So basically, the sellers have exhausted, you have buyers stepping in, you then delineate, or you demarcate the high of the trading range, the top of the trading range, okay? And this would be true in a regular trading range. But in Bitcoin, where supply is fixed and it's so very scarce, right? In this case, in Bitcoin's price action, in Bitcoin's history, we're getting these slanted accumulation ranges. So this is the high of the trading range at this point, okay? And after that, you get a phase B. A phase B is what Wyckoff would call the cause of the markup, okay? So everything's cause and effect. If price is going to go up, the cause of that is supply is diminished and demand takes over supply, okay? So that's a cause and effect in terms of Wyckoff's analysis. Phase B is the entire cause. In terms of Elliott wave theory, we call this the B wave, okay? So it's basically the counter to the A wave. You get an A wave in correction, you get a B wave, which is counter wave, okay? So the B wave in Wyckoff, the phase B is where you get a test of supply, the composite man. People take things literally. When Wyckoff speaks of a composite man, yes, there may be a big player, a market maker that is pulling the strings, okay? Big institutions that are buying and selling and, making orders and dictating the chart. But for Wyckoff's analysis, you want to trade as if, he literally wrote, as if there were a composite man, okay? It doesn't necessarily mean that there's a composite man behind every market, okay? Some diabolical sort of market maker that's trying to wrest you out of your supply. No, no, no. You trade as if there's one like that, okay? And so in this phase B, that composite man would be looking to test the remaining supply, okay, with secondary tests. So testing the bottom range, so they're selling, and they're making sure every time they get down to sell, there's less and less supply, because they want to make sure when they finally do buy and mark the price up that there's no more supply, so the price can actually rise, okay? So this is the idea behind the secondary test and the phase B. This is the entire cause, okay? Finally, this moves you to phase C. And all the while, in a successful Wyckoff accumulation, you should have declining volume because you're decreasing the supply, right? For people who don't understand proper accumulation ranges, they'll say, oh no, this is not ideal. This is not a proper accumulation range because you have declining volume. They'll think the opposite, right? They'll want to see increasing volume while the price is moving up. Actually, the opposite. When the price is moving sideways or slightly up in a successful accumulation range, right? Whether you're talking Wyckoff or not, you have decreasing volume. That shows accumulation, okay? Even in technical analysis, classical technical analysis, all right? So phase C, you finally get the last point of support, okay? And you can have multiple last points of support, but you typically you can get just one in the phase C, where the market maker, the composite man, attempts to see if there's any last bit of supply left, okay? And in that phase C, you can get a spring, okay? A spring is basically a test of supply below the trading range. So if you had a trading range, let's say our trading range was here, and for a lot of people, they're drawing this. Let's use a proper trend line. A lot of people are drawing this trading range, not like I've drawn it, but they're drawing it in a more conservative way. On the daily, they're omitting wicks, and they're showing that, okay, we've broken trend. And for them, they can properly identify a spring, and this would be the spring. For them, this is the trading range, the trend line that I just put in, and this would be the spring, which basically tests supply below the trading range. This is not a break of structure per se, showing a markdown. To the contrary, this is the last point of support, where you're testing really the last bit of your supply. And as evidenced by this is the declining volume. If this were indeed a break of structure showing a markdown, right, or preceding a markdown, you would see increased volume. You would see a spike in volume. So you don't want to sell this at all. On the contrary, you want to buy the spring. You want to buy the last point of support. This is where you buy, okay? And this is what I've been saying all along on the channel. The volume tells you this. Again, we're on the 12-hourly time frame. And pursuant to this is your phase D, okay, where you get your mark up. Slowly but surely you get your mark up. You get your signs of strength. And what I want to do now is I want to direct your attention to the last time we had a Wyckoff accumulation. All right, let me get rid of that. Last time we had a Wyckoff accumulation, and everybody was talking about Wyckoff in Bitcoin, and that was in the summer of 2021, where we had our, I think it was 90-day accumulation, right? It was May to July. Yeah, it was about a 90-day accumulation, where if you took the Wyckoff accumulation schematic and you superimposed it on this price action, you would see very little difference, okay? Even with the cookie cut Wyckoff accumulation schematic, okay? So what I want to do now is, given our last point of support, our spring of July of 2021, that preceded our big rally to the upside, I want to take this, right? Same asset, same support and resistance. I want to take this and see if there could be any similarities in our current price action. Okay, so let's snip this price action right here. from July of 2021. And let's put it in and just say that we were in our spring phase, okay? And look at what you get. Look what happens here. It's almost uncanny how your previous price action of July of 2021 matches so very well with our current price action of April of 2022, right? We haven't hit the bottom of this trend. We could, right? No problem. We could come all the way down here to the bottom trend line, right? With these two last data points, right? We've created this trend line. So this is our support. We can even, right? According to Wyckoff, we can even break this slightly, right? As a spring. We can go below this, test the supply beyond this trend line, and mark up. And the markup, the highest resistance is at 50,000, and it respects our upper trend line. Mind you, I just copied and pasted previous price action of Bitcoin from last year, and it follows almost exactly to a T this this trading range, which happens to be sloped, okay? So we have resistance here at 50,000, and we've said that we're likely to get resistance from 50,000 to 51,000, depending on when it hit. We have then a retest of 46K, okay? Big resistance. And then we continue our way up, right? This may or may not happen, but it's just uncanny how it fits in. If you find value in this analysis, right or wrong, please like the video, share the video, and subscribe to the channel if you're not yet subscribed for daily Bitcoin updates, occasional altcoin updates, right? I'm going to actually go into our favorite altcoins in a minute, and weekly live streams every Tuesday at 4:30 p.m. Eastern Standard Time, right? So now that we've done Bitcoin and I've shown you the Wyckoff analysis, now let me tell you, in terms of classical analysis and what we've been talking about ever since, why Bitcoin has confirmed reversal, right? We go on our 4-hourly time frame, and you'll know yesterday I was talking about bullish divergences not yet being confirmed. Well, my friends, they're confirmed, right? You have crosses, bullish crosses on the in the stochastic RSI. So this is confirmation of our bullish divergence, okay? And here we go. 4-hourly time frame. We have a lower low in price action right here from this low to that low, okay? We have a lower low in price action and a higher low on the 4-hourly time frame, a confirmed higher low in stochastic RSI. So expect a markup from here, given the strong bullish divergence on the 4-hourly time frame in Bitcoin. Now, let's see our favorite altcoins. We can also see strong bullish divergence in our favorite altcoins, right? Revain's the only one that's yet to be confirmed, okay? We don't see strong bullish divergence there yet because this has yet to cross, okay? But we expect this to cross anytime soon, right? So here's the lower low in the price action, and here is where we anticipate a cross soon, okay? Not yet, though. Not yet confirmed in Revain. Now, Kadena has confirmed very beautifully its 4-hourly bullish divergence, right? Sorry, this isn't the lower low. Here it is right here. From here to there. And here's the confirmation that you have in stochastic RSI right there. Boom. Higher high, crossed beautifully, very bullish. Kadena's looking extremely bullish from here. That cross was very, very strong, okay? And finally, last but not least, Verasity. Very nice, strong cross on the stochastic RSI, confirming strong bullish divergence. Right here, lower low in price action, right? And then a higher low, or actually, you don't have as strong a cross as in Kadena, because Kadena, like the higher low in the stochastic was marked, was very clear. Here you have it pretty much sideways, but that's still strong bullish divergence, okay, in Verasity. So that's it from me. Please like the video if you find value in this kind of analysis. Subscribe to the channel if you're not yet subscribed. Hit the bell notifications. And I'll see you guys tomorrow. Enjoy this markup. I believe that this is finally the day we see positive price action in the market. All right, take care. Bye.